Here in this tutorial, we will learn how to calculate acid test ratio. This ratio is also called liquid ratio. Okay. So first of all, we will learn the formula. Then we have an example taken from Cambridge IGCSE accounting first paper. I will show you how to answer. Okay, how to figure out acid test ratio. Okay. So here, first of all, what is the formula? How to calculate acid test ratio? Okay. So here we know acid test ratio equal to current asset minus inventory divided by current liabilities. So here, what are our current assets and current liabilities? So let us have a look at the question. Here we see the trial balance of M Limited at 30 November 2021 was as follows. So here we have a list of balances. We have here asset and liabilities, incomes and expenses. So from there we need to figure out, we need to extract which one is relevant to this ratio. Okay. We know current asset. What are the current assets? Trade receivables, inventory, cash in hand, bank balances, and other receivable. Okay. At the same time, what are our current liabilities? Like trade payables, short-term loan, and other payables. Okay. So here on the question we have current assets. We will check first of all what are our current assets. Okay. So let us start here. Trade receivables, $9,800. Okay, this is on the question. We have here bank balance. It is $162. Okay, then we have here inventory. It is actually closing inventory. Okay, so let us have a look at the question. So here number one, adjustment number one, inventory at 30 November 2021 was valued at $12,830. Okay, so at the end of the financial year we have inventory. It is a closing inventory. There are two types of inventory. One is opening inventory, one is closing inventory. We do not take opening inventory here. Okay, we will take only closing inventory. Okay, so let us write here $12,830. Okay, now we have one more adjustment. Let us have a look at the question. So look at here, number 4, rent includes a payment of $2,250 for 3 months from 1st October 2021 to 31st December 2021. Okay, so here our financial year ended on 30 November 2021, but here rent is paid until December. Okay, that means 1 month rent is paid in advance. Okay. So for 3 months we are supposed to pay $2,250. So how much for 1 month? It is $750. Okay, this amount is paid in advance. Okay, it is other receivable. Okay, it is also a current asset for the business. Okay, so let us write here other receivable. Okay, so here we calculated $750. Okay. So these are the amounts we have. These are the items we have as a current asset in this question. Okay. Now we will sum up. So here we get $23,542. Okay. So here on the question we have one more adjustment. So here adjustment number 5, provision for doubtful debt is to be set at 4% of trade receivable. Okay. So there is a trade provision for doubtful debts or trade receivable. We must subtract this amount from the trade receivable. Okay, many students make mistake. They directly write this full amount to calculate the total current asset. It is completely wrong. Okay, do not do this. Okay, so here we will calculate. How to calculate? So here we see $9,800. Okay. So it is 4% trade provision for doubtful debts. So here what we calculate, if we multiply 4%, we see here $392. Okay, this amount you need to subtract, okay, from the trade receivable. Okay, So let us minus this amount, 392. Okay, so we get here now $23,150. Okay, this is our net current asset. Okay, so let us write here in this formula. Current asset we calculated $23,150. Okay, we will subtract closing inventory. It is here $12,830. Yeah, this one. So let us write here $12,830. Okay, now we have to calculate our current liabilities. Yeah, so let us have a look at the question. So here we see trade payables $11,585. Okay, so this is our current liability. So let us write here trade payables $11,585. Okay, so do you have any more current liabilities? Let us have a look at the question. So here we see adjustment number 3, accrued operating expenses at 30 November 2021 were $415. Okay, accrued expenses, outstanding expenses, area paid, owing. If you see anything like this in the question, you will think that it is a other payable. Okay, it is a current liability. Okay, so let us write here $415. So these are two we have on the question as a current liability. Now if we sum up these two amounts, we get $12,000, right? Okay, so here this is our current liability. So let us write here $12,000. Okay, now we will simplify. So if we subtract 12,830 from $23,150, we get here $10,320. Okay, this is our current asset minus inventory, and here we have $12,000. Okay, now if we divide this $10,320 by $12,000, we get here 0.86:1. Okay, so this is our final answer. So what does it mean? For every $1 liability, we have $0.86 asset.